Conservancy, because Earth is an island.
KCAA is your CNBC News affiliate. We're the station that gets down to business.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome to the show. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. And our telephone number will get you through to me to talk about mortgages. I know, I talked to one of my guests last week off air, and she said to me, when I first thought about it, I was like, mortgage show on the radio? How much can you possibly have to say? Well, she went into YouTube, where a lot of these shows are housed. If you go to YouTube, go to Jeff Barton, the real estate voice, and you'll see this show as well as our Las Vegas show. Anyway, when she did that, she then called me back later and said, you know what, I guess there is a lot to say about mortgages. And I said, you're absolutely right, because really what people are looking for out there, and what if you're looking in this same direction, then we're on the same page, they're looking for a way to save money, answers to questions that they just can't possibly get online because you don't understand the process. Yes, you can read English, and yes, you can kind of figure out what needs to get put into a box if you're looking at Rocket Mortgage or Quicken or a number of other applications that you can just fill out. But what you really need is some assurance, some human being to say, look, I get why you're confused, or, hey, I know because I've been down that road before with other customers, or even myself. I have a mortgage. I know what it's like when you don't know what question to ask, and who to trust. You're talking about hundreds of thousands, if not more, dollars that you're going to have to repay over the next, 20 to 30 years. You got to figure out right from the get-go who you can trust, and then once you got that information, can you trust your own decision-making process when the information is kind of confusing? For instance, you fill out a 1003, what they call a 1003, which is really the loan application. And we throw about these numbers and vernacular and the different anachronisms all over the place in the loan business. And it's bound to be confusing. And not only that, it's meant to be confusing. Why? Because in our business, the most important thing to do is to gain, and Daryl, you can attest to this too, the most important thing in sales is control, am I right?
And trust.
Control and trust. You want to make sure that they come to you and that you have control over the conversation.
No question about it.
And as off air, we're talking about sales in general, some of the tough jobs that you've had in sales, and one of the tough jobs in mortgage sales is to pick up the phone and call somebody cold. You really want inbound calls. You want people to call you, which is why on this particular show I often give the telephone number 800-713-2929 so that you have a chance to write it down and you can call me with questions. I'm not going to call you. That's what this show does. It tries to provide answers to questions that you're going to have now in the future or possibly down the road when you're just sitting around trying to figure out some, debt to income or closed loan to valuation, or you're trying to figure out whether you want a short-term loan or a long-term loan, a construction loan or a land loan. Maybe you want an interest-only loan. Maybe you want a 20, 30, 40-year loan. There are all kinds of ways by which you can go. We've got a couple of great guests on the show today. One of them is going to talk about the real estate market and what's going on in the Inland Empire and how many homes are for sale and what their business is like. And Robert and Antoinette have been on the show before. And Josh Thompson, one of the loan officers for Malibu Funding, sponsor of the show, he's going to come on and talk about what's going on in terms of the rates. I know if anybody's watching the Federal Open Market Committee meeting in the last couple, 3 days, they're going to meet on, and have met on Thursday, and to decide exactly when the next rate hike is going to be. Now, why is that important? Is because what we've seen during the last year is we've seen the interest rates for mortgages climb at least a point, if not more so. We've got 30-year conforming rates today at about 5% nationally on average. 5%. Now, that may not seem like a lot or too much, but for some people it is. And one of the graphs that I've noticed in researching this particular bit of information today was the graph that showed that every 1/4 to 0.5% raise in the interest rate cuts out a certain percentage of the market from getting a refinance loan. Now, why is that important? Most of the companies out there that do loans today, whether it's a bank or a mortgage company or a mortgage banker like Malibu Funding is, they all depend on keeping the doors open by doing a certain volume. You have underwriters, you have account executives. Heck, I was just recently doing business with Flagstar, and Flagstar sent me over a list of the number of people that I needed to have on my contact list. And this is just a small list. There were 10 names on this list. Every one of these people is making between $75,000 and $150,000, and that's just one segment of the company. You can imagine the amount of people that you have to employ at big banks like Bank of America or Wells Fargo or Citi or Chase or any number of these very large institutions, and of course the mortgage bankers like Flagstar, let's say, or mortgage brokers. In order to keep the doors open, there has to be a certain number of loans in every day, every year. My particular bank, Union Bank of California, where I have my own business account, right? Okay. They merged with a different bank just recently. Why? Mortgage banking for them has obviously taken a hit because you just don't have as many refinances as they used to have. And Union Bank, which specialized and specializes in jumbo mortgages, i.e., you know, anything over $1 million, really super jumbo, they're just not as many as they used to be. Now, when you see this type of struggle in the marketplace, this leads everybody to the assumption that, okay, this is a good deal. Everybody's struggling, so they want my business. It is and it isn't. If you're out there and you're looking for a mortgage and you want to negotiate, best thing to do is obviously go to 2 or 3 different lenders. Go to a banker, a broker, and a bank. Go to 3 different people in 3 different areas. But you have to be careful because, as I was saying, depending on the need of that particular institution, most of us in the mortgage business who are not small. Malibu Funding, the company that sponsors the show and that I work for, they're a medium to small size company. Maybe they have 60 to 70 different people that work for them, either as loan officers or as staff. But they don't have high salaries of underwriting. A lot of that stuff that we use is outsourced. But if you look at a company like Flagstar, it sends me over a list of 10 different people with high salaries, you know that list is probably like 50 or 100. So that overhead is huge. When refinances stopped about 12 to 18 months ago, and what I mean by stopped is the decline in the number of refinances in the market is acute. And every time a rate goes up, it's 5% now. This time next year, it's going to be 6%. When it hits 6%, we're in a situation whereby we probably got less than 500,000 to 1 million people who are eligible to get benefit out of a refinance. Today, it's probably 1.5 million to 2 million. Now, why is that significant? Because the pool of people that we can get loans from outside of purchase loans keeps shrinking, which means that the lending community has to also shrink or be bought out or merge or go out of business. When there's less choice in the marketplace, that means that the companies that are left get to dictate pricing more, and you get less of a choice. So when you're happy about the fact that mortgage bankers, brokers, and banks are struggling because you think that will give you more of a leg up because you've got the 805 FICO score and you're making $200,000 a year and you want to buy that house and you just want your particular rate. Just understand that when we have more of a balanced marketplace, when necessarily rates are such that we can have a good number of refinances, not a shrinking supply of refinances, that keeps the number of people in the business higher than they're going to be in the next 18 months to 2 years. Midterm elections, the next 2 years are going to, really probably be stalemate in both the federal and state level, although the state level is still controlled by the Democrats. But what you might see is an increase in taxes. They're always looking for money. So anytime that you have money taken out of your pocket gives you less of an income with which you can qualify for a mortgage. That and diminishing returns on competition, yeah, that's not a good thing. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. That's our telephone number, and pick up the phone and give us a call, talk about mortgages. On the earlier segment, we were talking about things going on at both why, the competition in the marketplace is a good thing, and keeping people in the marketplace is a good thing, and how come a lot of people are merging and getting acquired or going out of business at this particular time. And, as I was joking, and unfortunately the joke is on a lot of us in the mortgage business, that when the economy is doing well, the mortgage business is not doing well. And I think a lot of people enjoy that. It's like when the real estate market is bad, realtors don't do well. And, real estate agents, mortgage brokers, used car salespeople, yeah, we all get that same bracket around us as professionals. But being professional, what we try to do is obviously help people, and I think in large measure we do that. But we've always gotten a bad rap, and I think mortgage brokers got blamed for the last horrible recession we were in 2008. And granted, there were many, many, many mortgage brokers who took advantage of situations and really put churn on the borrower and have them refinance 2-3 times a year and have them get into loans that they shouldn't have gotten into. Granted, that was taking place. I think the Fed, and one of the things I'm going to talk about right now, the Fed itself, lowering interest rates, raising interest rates, they're really at the crux of what's going on, both centrally with the economy and also with rates either on your credit card, on your car loan, or other things that would require the Fed to be able to step in and either raise or lower rates. That's what's affecting those particular items. Mortgage rate comes closely thereafter as the bond market also reacts to what goes on in the economy, which is a direct result of what either the Fed says or what they do or what they don't do. So much so that even the president came out against Jerome Powell raising interest rates once again. I think we're going to see an interest rate rise by the Fed in December, and I think everybody's built in 4 this year, maybe 3, maybe 4 next year, maybe 2 next year, but certainly interest rates are on the rise. Now, how does this affect the economy? I think when you look at everything, for instance, you go into the store, you go into any store on any block in America, and you want to buy a carton of milk, some eggs, some bread, and you see how prices are, and you look at where food prices are today, where what they call the core inflation rate, whether it's your rent and your mortgage and some of the other things on the core inflation rate index, as well as what you pay for bread and milk and other things like that. Inflation itself is something that's been under control probably for 20 years. The last time, Darrell, do you remember the last time we had inflation back when Carter was president, what the inflation rate was at the time?
Well, it was double digit.
Yeah, I think it went up to 18% at one time.
Yeah, I think it was pushing 20.
Yeah, exactly right. Now, we haven't seen that for a long time. We probably have the core inflation rate somewhere around 2 to 3%.
Well, that was just the leftover of it's the economy, stupid.
Exactly. Well, I think Nixon had price controls, right, before Carter got in, and then that intense off-book accounting that Bush had during the Bush years really didn't account for any of it. So the inflation at that point was basically the Treasury printing money, which is what's happening right now worldwide. We, during the last decade, probably printed up about $20 to $30 trillion extra if you include all of the stimulus packages that were around the world. Yeah, that's how much extra money was just printed by governments in order to float the whole thing out of the last recession. Now, what does that mean? Well, it means today that we're seeing tightening of fiscal policy. And how does that affect you? Well, go into the store and say to yourself, okay, do I want the price of bread to go up by a dime a week for the next, year, which means that it'll cost me another $1 next year, the same loaf of bread that I paid this year? Or do I want to see the actual money that I have in my pocket be worth less? So what I'm saying is, tightening of monetary policy by the Fed is a good thing as long as it doesn't stop you from making more money. And this is the balancing act that we've had going on probably for the last 12 to 18 months, where we had the last Fed chair and this Fed chair looking at inflation as the #1 reason that they're in business, right? Let's keep inflation in check. And their magic bullet number is like 2%, 2 to 3%. So if things, for instance, wages right now went up 3% last quarter. Now that's a big number when you consider, you have 154 million people at work. And you think about that, add that number up to be how much money you make each month, and then add 3% onto it. That's a big number, okay, in terms of inflation and what that actually means. Now, does that translate into buying power, or does that translate into, no, the inflation that you just seen in your wages is also going to be affected in the cost of bread, because that bread's going to go up. So really, it's a wash. So as the Fed tries to keep inflation under control, their main concern is to make sure that we don't have, rising inflation, so that the car this year that you bought last year at $10,000 is going to cost $15,000. Well, that's insane, and that can't happen. So here we go. I'm going to read a couple of things from an article by Daniela DiMartino Booth, and she is, of course, by the mortgage website that we go to each and every week. Mortgage News Daily. I want to thank those fine people over there for putting out great information. But she writes about the minutes of the September meeting, and it talks about the members advocated for pushing the Fed funds rate currently at 2% to 2.25%, and that's what I'm saying about raising of the rates. And they're saying they're doing that is because when we get into a situation where the economy grows beyond 3%, which is where we were last quarter, 4.25%, that sounds like a very robust number, and I hate that word. Do you like that word, robust? It's just one of those.
It's puffery. It's a puffery term. It's just one of those words that's been overused so much. Robust. I mean, if I hear robust, well, I'm like, what does that even mean? It means it's gone up a lot. Every person I talk to, something's either fantastic or it's a disaster these days.
Exactly.
Those are the only two terms.
Well, in the political climate we're in, what are you kidding? That's exactly what it is. But she says, and I happen to agree with her, that the economy, being what it is, have financial markets worldwide, they're suffocating. And why is that? Because the liquidity, that $30 trillion that I said has been pumped into the worldwide economy over the last 10 years, is suddenly, like the Fed, raising rates, beginning to dry up. And what happens when people can't get easy access to money? Obviously, they have to pay more for money. Just like when your wages go up, people who hire you have to pay more money in order to get the same talent or better talent. That's the way it works. That's supply and demand. Unless you are somebody who is at the Fed saying, well, wait a second, we have to cool off the economy. So what's happening worldwide is that not only there, but here in the U.S., the tightening on the monetary policy in the United States, i.e., money's not so easy to get anymore. We're going to raise rates. We're going to raise the core lending rate to 2.25%. Probably by next year, we'll be at 3%. Now, there's this magic thing called neutral. What does that mean? That means if you have the core lending rate at the neutral number, they're saying it's 3%. They don't really know. That means that you can have unemployment low, you can have wages continuing to grow, and inflation low. That's the magical formula that the Fed is trying to get to. Now, I don't know about your business, but my business is terrible right now. Why? Because I don't have customers because the rates are too high. So if you're in a business like mine, then you know what I'm talking about. But if you're a majority of the people out there who are working, who are happy, who are making more money this year than last year, and are looking forward to a great 2019, well, that's terrific for you. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening to that economic lecture. I really appreciate it, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929. That's the telephone number. If you pick up the phone and give us a call, you can get in line and talk to us about what your issues are, your problems are. Maybe you're looking for a great deal and you just can't find one. You're looking for an agent. You're looking for a broker. Maybe you're just out there trying to get information about a property, a neighborhood. Maybe you're looking for information on school systems, crime statistics, anything that has to do with real estate or finding a great mortgage, we can help you with. And if I can't help you, I'm going to find somebody that can. And in line with that is Robert Perez, who's been on the show before. Works for Platinum Realty, and I really appreciate you coming back on the show, Robert. Thanks very much.
Oh, thank you, Jeff. It's a pleasure to be on. Thanks a lot.
No, thank you very much. Okay, tell us what's happening out there. We hear rumors that the market has slowed down somewhat, and maybe there's some more inventory out there. What's your assessment?
Properties are definitely on the market longer than usual.
Okay.
I think sometimes you never want to point fingers and say, oh, it's this person's fault or that person's fault. But I think one of the reasons is the expectations that sellers have are still a little bit too high.
Right.
And sometimes they list the property too high because they talk to friends that are not in the business or whatnot.
Right.
And I think nowadays they just need to listen more to the real estate agent that they hire, whoever that is.
Right.
You know, take them into consideration when it comes to information.
What is the secret to getting sellers, or buyers for that matter, to react to the market as quickly as the information that we can synthesize within seconds? It usually takes them a couple of months to really get it through their head that, oh my gosh, I guess I got to pay more, or oh my gosh, I guess I better lower the price. Right?
Definitely, you want to get comparisons to other properties. You want to make any seller feel that you have the pulse of the market.
Right.
You know, if you're a seasoned agent, you'll have more experience doing that. If you're a new agent, you at least want them to feel that you've done at least your research, and you want to make sure that properties within that 1 mile or 2 mile radius of the home you're looking to sell or list. You can tell them, look, this property's been on the market for X amount of days, and I think it's priced too high. Or maybe have them play along with you and say, how much do you think this house is worth?
Right.
See, because sometimes sellers are the ones that have no clue
right.
what the properties are worth.
Well, I think what the problem is that with companies like Zillow or Trujillo or Realtor.com, where those particular sites are trying, their main concern really is not selling properties, but it's driving traffic.
Definitely. That's actually a very good example. You know, a lot of times people just go onto the site and they
right.
look up what's my property worth, and even if you do that to yourself, if you just recently bought, you can go on there and see, oh my God, I got ripped off, or I
right.
paid too much, or I didn't pay,
yep.
I got lucky, and really that's not accurate at all.
No, exactly. And I think what happens is technology and the ease by which it's acquired has left people with the assumption that what they see is the truth, especially in the real estate market. Everybody feels they know more than their realtor or what's in the MLS, and that's just not true, because the information that is available on sites like Realtor.com or Zillow or Trujillo are really... They're meant to drive traffic, as I said, and they're
That's
usually
true.
10% off. They're usually
if I had a dime for every time a client told me or a seller told me, I talked to my friend at work and they said I can get more, or they said I can do this. You know, and sometimes you just want to tell them, well, maybe you should have them sell your house. You know,
right?
I wouldn't be in the real estate business if that was the case. If I had a dime for every time, but
right.
you know, you just want to be honest with them and put the facts in front of all the clients. I think if you come with the facts and you show yourself to be an honest person, they'll definitely get in line and they will do whatever. You know, ultimately they want the house sold and they want what's best for them.
Right.
So, you know, creating a good team around your client, which is the seller or the buyer or whatever, you want to make sure that you get the right lender on your team, the right escrow office on your team. You know, even a tax person, too, is sometimes somebody that can help you.
Well, speaking of that, there's still confusion in the marketplace as to, is it 2 years you got to hold the property? Is it 4 before you get the tax bill? Which is it?
You know, legally, we always have to revert back to the tax person.
Right,
you know?
exactly.
Now, look, by law, as you know, when you take the tax exam, that's the first thing they tell you. Never give tax advice.
Right.
So, you want to wait 2 years. That's a fair assessment before you decide to make whatever move you want to do. If you want to make it into a rental, most people will give you the advice if you're there for a few months, if you make it into a rental, nobody's going to say anything, which probably nobody will. But legally, you want to make sure that the banks, the people that are lending you the money, that they feel comfortable with that, with that type of loan. Ultimately.
I agree. Hey, give us an area that you're working currently. Where are you getting most of your clients from?
Oh, I'm glad you asked. I have hit, fortunately, my parents live in the Riverside County area.
Uh-huh.
So I live in L.A., so from my front door to my parents' front door is an hour and 40 minutes. So I visit them once every other week or once a week. And while I'm there, I try to hit some of the local real estate offices there.
Sure.
And it has been working out. So in the city of Riverside, in the city of Banning, actually, has been a small little gold mine for real estate business. And now it's growing. There's 5,000 properties coming up that they just broke ground on. So I know the property values are going to be on the rise. But we just closed the deal today, $155,000, 2-bedroom, 1-bath house.
Well, that's a great deal. Hearing that gives people out in the marketplace, they're thinking $155,000 for a 2-bedroom must be in the worst neighborhood. Where was it?
And it's not. It's in a great community. Actually, my in-laws live there. It's in the city of Banning, and the going price for they're smaller homes. They're under 1,000 square feet. Now you can find your 2,500 square foot, $500,000 homes out in the city of Banning if you want to.
Sure.
But if you're looking for a starter home, that's a great community. It's close to the freeways. And now you want to say it's booming, because Amazon is going out there.
Right.
And if you can't afford to live in LA County, you got to start somewhere. So go east. It's not that far. Well, when you tell somebody an hour and a half, it is a long way. But as you start driving it and you make the commute, it's not that bad.
No, and I absolutely like Riverside. I love the county. I love the city. I like to be able to get out there. It's a different kind of living. But as you said, the affordability in housing there is so much greater than other parts of Southern California. I mean,
it's true. It's true. You know what? It reminds me when I bought my first house was 20 years ago. I worked in the city of Torrance, and I bought my first house in the city of Eagle Rock.
Right.
And I had to commute an hour and a half.
That's right.
Because by the time you got off of work, and sometimes it's like, I don't know if this is worth it.
Right.
But if you can find a job out there in Riverside County, or even San Bernardino, or even in L.A. County,
right?
If you can get used to the drive, you can start there. Today it's a starter home. Tomorrow it's an investment property, or it's a stepping stone to your next home.
Well,
you know it. You're living in it. You're living back in L.A. You buy, you fix up, you wait for the market to increase, you sell it, and then you use your profits to buy something else.
Yeah, I think, the show's being aired in several areas, San Bernardino, Riverside, and up in Tahoe. And for these areas, why don't you shout out your phone number, let people know how they can get in touch with a great realtor?
Oh, thank you.
Sure.
My name is Robert Perez. My phone number is area code 951 area code 538-4148.
538-4148?
That's the one, 951 area code, yep.
Okay, excellent. All right, a couple of quick questions before we wrap up. Where do you think we're going to be headed? Do you think that we're going to come to a place where we have an equal number of buyers and sellers anytime in the near future?
I see builders building.
Right.
So for me, if I see builders building, I see values going up. Builders don't build if they're not expecting buyers.
Right.
That's just the way those are one of the indicators that I use. So I think I don't think anybody's leaving California. It's taking longer and longer to get to work. I think we're going to have a lot of buyers here.
Right.
And I think the values are going to start to move sideways because interest rates are going up.
That's right.
I think right now is the best time to buy before interest rates get too high. Values will come down, but you'll just be paying that much more for the home.
Right, and I 100% agree with that assessment. I just know that depending on, what happens in the next, I guess, through the next election cycle, which is another 2 years away, but certainly what we're going to find is demand for housing is still going to continue to rise here in Southern California. So Probably right that the best time to buy is right now.
Right now.
Okay.
Right now. Anytime the bank is willing to lend you money is a good time to buy.
Excellent advice. Robert, thank you very much. I appreciate you coming on the show.
Thank you, Jeff. We'll talk soon.
We'll talk soon, and that's Robert Perez from Platinum Realty. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone. Give us a call. We talk mortgages. We talk real estate. We talk issues, problems, and solutions in that area. I mean, obviously, what we're going to try to do is help you with questions that you're going to have. You're trying to buy a house, or maybe you're out there searching right now for a raw piece of land because you want to build a house. You figured out, you know what, I don't want to pay $500,000 for a house. I can buy a lot for $50,000, $100,000 and plunk money down, get the permits and build for a lot cheaper. Well, I brought a guy on the show today, been on the show many times, but at the same time, he's here with a different hat, and he wears different hats for us at Malibu Funding as well. Appreciate it. Josh Thompson. Josh, how are you?
I'm great, Jeff. How are you?
I'm okay, and thank you much for asking. I'm interested to bring you on the show because in San Bernardino and Riverside counties, there's a lot of building going on, and since you have some experience at all different kinds of, development is what we would call it. Can you just describe what development is and what you're doing currently to try to bring more housing to the market?
Real estate development is basically the practice of, buying land, whether, there's a property on it or not, and basically going through the entitlement process, getting it entitled, getting plans drawn up, and getting permits to build, whether it be units, a subdivision, that's going to be at a greater value, much greater value than what you purchased the land for. So.
And, okay, on a scale of 1 to 10, difficulty in doing what you just described?
Oh, yes, I would say 11.
That's exactly.
And it all depends on the density of what you're trying to do and the local municipality, and how friendly they are with developers. Because the project I'm working on, been working on it for 3 years.
Yep.
And just got preliminary approval for the actual subdivision. I'm doing 20 homes in Inglewood, California. There's a lot of stuff going on there with the stadium and, a bunch of different projects going on there. But literally, the first route that I took, we tried to do 35 condominiums. The city, we needed to do some affordable to basically get a density bonus with the zoning code. And then it comes out a year and a half and a lot of money down the drain because they didn't want affordable units going up after all. So we kind of switched it into a different, thing, doing small lot housing, which kind of was new for the zoning code. So we still had to have a city hearing to have it actually voted on.
Right, and this is like a special use permit you have to get with approval?
Exactly. So kind of a nerve-wracking process because we still had no indication as to whether or not it would be approved, and we're spending a bunch of money on it. But luckily, it did get approved in the city hearing. So now we have another 3 to 4 months for site plan review to basically adhere to all of the conditions that came with that special use permit approval. So,
give us a list of the top 5 things that you need to do in terms of getting this process going, whether it's buy the land or have the zoning in place or do this particular hearing or draw up plans. Give us 5 things that you needed to do right away.
Things right away is, first is just the feasibility analysis. Before you even make an offer on a property or, spend any money, you kind of have to have an architect. That's what I have. I have an architect that I can go to, and he'll do some spec work for me for very cheap. I can look at a piece of land or a couple of different parcels of land and he'll tell me a ballpark idea of how many units I can get there if I want to do units, how many homes we can get there if we want to subdivide it. And, based on those numbers, I know enough of project costs and construction costs, and you can just Google, local construction costs or current construction costs, and see, if you're going to actually if the project is going to be profitable based on the cost, and holding, and also too taking into consideration if you're going to finance it, what rate are you going to finance it at. You have to be very detailed with how much everything is going to cost, and always plan for it to take twice as long. What you think it's going to take.
Yeah, no, twice as long and at least 20 to 30% more than your cost analysis says.
Exactly. Yeah. If it still works out, and you're still with a good profit after that, then it's a feasible deal. But if it's tight, and you have to deal with local municipalities or any special use kind of thing, then yeah, it has to be a home run.
Now, you're dealing with city councils and you're dealing with mayors, and the city of Inglewood, although it's a fairly decent-sized city, is not a metropolis, right? It's manageable in terms of the number of people and the amount of people you have to deal with, but at the same time, it's difficult because you have to deal with the personalities of everybody involved who don't necessarily understand the building business.
Yeah, yeah. It's very tough because, some people that are in the planning department or on not necessarily just the planning department, but people that are on the city board of officials that, sometimes their interests don't align with yours, and they are concerned don't align with your interests. So, they're really looking at what's best for, or what they feel is best for the community.
Isn't that the issue, though, right there? Is that what happens is the issue for most cities is that there isn't enough housing, period.
Yes.
Yet, people have different agendas when it concerns that, whether it's going from low density to high density, meaning that instead of building single-family homes, you're building high-rise condos. Yeah. Yet the problem is still the same. So you've got elected officials who don't necessarily have the long-term goal in mind about supplying housing. They want a more, congruous neighborhood, that all of the houses are the same, that you don't have high-rise next to low-rise, that you don't have high density in areas that necessarily should warrant it, especially around an area like the stadium.
Yeah, and I feel that cities in California need to really kind of revise the general plan.
Yep.
Because, with that general plan, I mean, this was made 100 years ago or however many years ago, and times have changed. Population density has grown tremendously and is still growing.
Yep.
So, with all of these rules and things in place, I think if some of these zoning regulations were kind of enhanced, especially in high-density areas, there was something that was going on the ballot that never made it to the ballot, actually, with something to kind of revise the zoning in near, transit areas.
Right.
I think within a half-mile radius, you would have unrestricted zoning around major transit or bus routes. And I think that's something that would be great. I mean, there's plenty of developers and builders out there that want to do projects, but kind of shy away from, the bigger projects that can actually really help the housing crisis and provide inventory because of the process. And it's just not feasible for a lot of developers. But, I think if they streamlined the approval and permitting process, then there would be no housing crisis in California.
And in areas that need housing, which is most of the city of Los Angeles, San Bernardino, Riverside, you go to any metropolitan area that has 100,000 plus people in it, you're going to need more housing. And in Southern California, the housing crisis, I heard 2 million houses are needed to be built in order to alleviate the housing crisis here in Southern California. It's just, how can you do that if you've got these competing interests trying to prevent it? It's the old not in my neighborhood crowd.
Yes, I call it not in my backyard.
Right, NIMBA, right, exactly right. Okay, So you have a lot of expertise in this. Shout out your phone number. Maybe there's some listeners out there who are looking to do similar projects in their area but might need a little help, a little assist from somebody who's experienced.
Oh, yes, my number is 323-945-5694. Joshua Thompson. And Jeff, I also wanted to add a thing that we can all do to kind of combat the housing crisis is a great ad is doing an accessory dwelling unit on your property.
Right.
And that can also help with some of your current housing costs at the same time. Over-the-counter permits, very easy to get permits for this. You're even allowing people to convert their garages into these accessory dwelling units. I'm doing a flip in Mid-City, Los Angeles, where I'm extending, the main house's square footage and adding an ADU in the back. I think it's a great thing that, I know City of LA is doing it.
Yep.
I'm sure.
It's city by city. It's not a statewide thing, so you really have to check with the city. Good thing to do is probably give you a call.
Yes, exactly.
Hey, I'm up against the clock, Josh. Thank you very much for coming on the show. Enjoy the information.
All right. Thank you, Jeff. Thank you for having me.
And thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's a telephone number. And as we've been saying all show, pick up the phone, call us. We can help you with questions that you have to get answered today because, that offer you got to put in and the mortgage approval letter that you got is out of date and you got all this pressure on you to perform right now. Well, we can help you with some of that. And one thing I learned, did you ever take one of these courses, Darryl, like a negotiating course or?
Yeah, several.
Okay.
Yeah.
So, and I think who did I take one with? And I forget it, but it was all about, take your time, take control of the negotiations. If someone says you have to get something done by a certain date, you really don't. You just have to negotiate it better, right?
Yeah, I saw these guys in all the magazines with the seminars. Then I did Brian Tracy's Phoenix seminar, which is a week-long thing.
Yeah, they're very good. And I think the main thing I got out of the one I did was that they sent us, they gave us all parameters. They said, okay, here's what you got to do. And you got to get out there and you got to solve this problem, and we're giving you 10 minutes. So after the 10 minutes, the 5 groups that were out there, two-person teams, right? We came back and we said, we negotiated for another 10 minutes. And the guy was like, oh, yeah, that's pretty good. He said, you had to do it by 10 minutes. I said, yeah, but it's a negotiating class. So anyway, that was...
Treated time as a commodity, right?
That's exactly right. You don't have to... But anyway, if you're out there and you're in that situation right now, either with a real estate contract or you're in something, and in the mortgage industry, everything is dependent upon funding of that loan and recording of that document in order to get the deal done. Now, we're involved in many deals over the last year, even the last 2 or 3 months, that the timing doesn't work out 100% of the time. Either there's something happens to the property or the real estate negotiations get bogged down and we don't get the documents in time, but the funding that takes place can always be negotiated. And as long as people understand that, that's a good thing. Let's talk rates here. We talked a little bit earlier in the show, 30-year fixed rate, 5%. Okay, that's really where it is today. A year from now, it's going to be 6%. So if you're thinking about purchasing and that 1% difference between today and next year is an important thing to you, then I agree. I think it is. I mean, you're talking about 1% over $100,000 is $1,000 a month. So, yeah, it's a big deal. So if you're out there in the marketplace and you're looking for properties and you want a 30-year fixed, really start to get more invested in the process. As we were hearing earlier in the show, I think from Robert Perez, he was talking about out in Riverside, there are a couple of good properties. He bought one or had a client buy one for $150,000. Now, granted, it was under 1,000 feet, but so what? I like small. I mean, I belong to the small is better in most situations group of people. If it's just myself and my wife, I don't need 2,000 square feet. We can get along with, 1,500, 1,000. It just really depends on your need and where you want to live. And usually if you want to live in a really good area, smaller is okay. FHA, VA loans, 4.5% to 4.75%, still a really good deal. 5-year ARMs, 4.375% to 4.875%. Now that ARM product, I like the ARM product if you know what you're going to be doing in the next 3 to 5 years. Why? Because you just don't know where the adjustable rates are going to go after the 5th year. But if you're planning to buy something today,
you think the real estate market is going to either hold or going to go up, or you can get a tenant in there that you think can pay both the current note rate or the current rate on your ARM loan and the adjustable portion of it. Yeah, these are much lower in terms of the rate, and if you're going to sell that property within 5 years, obviously that's a good thing because you're going to get a lower rate, your payments are going to be lower, and you're going to sell this property. If anything I've read in the market is that housing is not going to be going down anytime soon. What we see is low inflation, as I said earlier. We see high employment. Last month, I think we saw 250,000 new jobs. And a lot of these jobs are not sales jobs, and they're not seasonal jobs. That comes about in November, this particular month. November, December, some parts of January because of the givebacks at Amazon and some of the other things. Yeah, they have a large hire-on for those particular months. My son, who works in Seattle, was just hired on as a seasonal employee for a gaming company, and he does some customer service for them. I think all of these seasonal jobs, they're just starting to gear up for in November, but in October, no. So if you're out there right now and you're looking at that 250,000 person added to the payrolls last month, yeah, that's a big number. I mean, you have over 154 million people that work in the United States. That is, again, another huge number. Maybe the most people that have ever worked. Maybe not on a percentage basis, but as an actual number. You consider all the children and everybody over 65 years old or 70 years old. I mean, this is why the unemployment rate is what, 3.7%? I mean, we're looking at possibly by the end of next year, 3.5%, 3.4%. These are kind of unheard of numbers. I was reading something in my research for the show that says we haven't had this low of an employment rate since 1969. 1969. Remember that year, Terrell?
I sure do.
Do you remember what the interest rates were that year?
No, I was a little young for that.
No, I didn't. I don't remember either.
I was just between junior high and high school.
Exactly. I mean, but 1969. You think about.
I think you could still get 5.5% off your checking your savings account back then.
Well, back then it was great because you could actually make money on your passport savings account. It was 5%. It was great. Now, granted, I'm making money picking apples. That's what my job was when I was 13.
Picking apples where?
Well, in Massachusetts.
Oh, Southern California.
Not out here. No. The apple.
No, we were scrounging money to go to the beach.
Yeah, I mean, I think 50 cents a bushel. Talk about slave labor. Holy smokes. Even in 1969, 50 cents a bushel. You know what a bushel is?
It's big.
It's a lot of apples. Yeah. That's why, I mean, you can work all day and only make $1.50. I mean,
and all the apples you can eat.
Yeah, exactly. And you can get sick doing it, too. Unbelievable. Okay, so that's what's going on with the rates in the mortgage industry. And again, I think it's a good time to get out there and look at properties. We are seeing, as we talked about earlier in the show, as I said, there's more properties on the market now than there has been in a while. Days on market is also increasing. We don't have yet a balanced seller to buyer marketplace, but sellers will get the message when their properties sit longer. Now, if you're looking at a particular property and that particular seller does not want to drop price because they think somehow they're going to get the price they want. Yeah, that may be true. But overall, if you're just generally looking at the market, properties sitting longer, we're seeing more reduction in prices and more negotiation of prices and more contingency negotiations, i.e., okay, there's an inspection, something needs to get fixed. Sellers are more willing to be negotiable on that. They're more willing to be negotiable on price. They're more willing to be negotiable on terms. Meaning that if you need, some additional incentives, maybe some payment of your, especially if it's an FHA loan and you want some closing costs, yeah, I think sellers are going to be more agreeable to something like that, just simply because the market dictates what's happening. Now, this may be seasonal, but if we have the election results, which I think, and by the way, why does this election result? They're taking so long because of the absentee ballots, because they have to count longer, right?
I would imagine if you vote early,
right?
Why are those votes the last ones to count?
It's the most bizarre system. I don't know why there should be a running tally somewhere.
Yeah, exactly.
Your vote goes in, it gets counted.
It's electronic.
Well, the paper voting and a lot of people voted absentee this year. I didn't.
Oh, you mean mail-in, right?
Yeah, mail-in or absentee. In some states, like Oregon, you have to vote absentee.
Well, I mean, I've seen this stuff on TV where it's called early
voting. That's what it is.
Where we go to the booth and you punch the thing, and that we should know immediately what that is.
Well, that's it. Yeah. Okay. So early. Okay.
At this point, they don't report any results until after the polls close, which I think is good because it could influence people either to not vote at all because it doesn't matter landslide.
Right. No, I understand that. Sure.
Nobody wants to vote for a loser.
Nobody wants to vote for a loser. Exactly. That's why when Al Gore came out in 2000 and said he won Florida, the Republicans blamed him for a low turnout later in the election cycle. Anyway, that's enough out of us. Thanks, everybody, for listening to the show. I appreciate it. I'm Jeff Barton. Thanks, Daryl, for jumping in.
Pleasure.
And I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.